People tend to underestimate IAS 38. They tend to dismiss it because it's easy. Well, after all, what is that? Depreciation, amortization, quite similar. Pirate criteria, pretty straightforward. But this is the standard that is tested very often. That is because intangible assets are everywhere. Even if you are working for a manufacturing company, you will still find patents, licenses, know-hows. So all of them will be intangibles or could be candidates to be an intangible. And since these assets are becoming more and more important in modern balance sheets, then we need to know how to account for them. Also, they are a perfect source for manipulation. Consider this. When you pay for something, you credit cash. So you need to record a debit. What could be your debit? Your debit could be an expense, so debit salaries, debit inventory, and so debit salaries, for example, expense, debit inventory expense. Or it could be an asset. But you cannot create property, plant, equipment. You can't debit inventory because they are tangible. And since you don't have them in your warehouse, in your factory, you can't recognize them. With intangible assets, the scope for manipulation is going to be much higher because it's intangible. You can't touch it. And because you cannot touch it, you can't really say whether whatever is included was actually the fair presentation or not. Okay, so what do? We need to understand how SBR tests this very standard so that you would be prepared for it. The first thing that will be tested is research versus development and especially about the past periods. Consider this. Year 2024, previous period, the company recognized a development asset. So, for example, they have been working on a patent and now in 2024, they realize that pirate criteria has been met and they started to capitalize the expenses. And in year 2025, they decide that no, the patent won't bring any benefits because nobody needs this technology. So what they decide to do, they decide to go back and just adjust it retrospectively and instead of capitalizing, just record it as research and development expense. The question is, can they do that or not? In here, we have this hint. Something has happened for the previous period. This means that we need to use IAS 8, changing in accounting estimates, accounting policies, and errors. And we need to identify whether there has been an error or not. If indeed there has been an error, then you would need to adjust it retrospectively. So you would indeed need to go in year 2024, you would need to restate the amount, so you would need to expense them to research expenses. And as such, you would have to recalculate retained earnings. But you can't put this research expense in year 2025, in current year. That's because according to IAS 8, this has to be done retrospectively. If there was no error, if indeed in year 2024 we thought that we would be able to sell this patent, but now we understand that nobody will need it because some other company has already launched this technology and this is for free to everyone to use. So what do? We say there was no error. As of year 2024, the assumptions were valid. And as such, the asset should be here. But since we now think that the asset won't bring us as much of economic benefits as we hoped, we would need to impair it. So IAS 36 comes into play and we would impair it, and maybe if nothing will be received from this very asset, we will actually write it off. but we can't write it as research and development because the nature of research and development cost, the one that is in P&L, is that investors and other users of the report think that it pushes you towards some benefit, some breakthrough. And now, since you know that this very asset won't bring you any benefits, it doesn't push you closer to some assets, to some economic benefits. So no, it would be just impairment. So the P&L entry would still have the same amount, probably. So it would be debit P&L. But the line in P&L will be different, and as such, the perception that users will have will be different. And that very idea, so IAS 8, IAS 36, has been tested several times, and chances are that this idea will be tested again. Another thing that can be tested is revenue-based amortization. And look, in this very exam, you need to acknowledge that there is some common treatment, but in this case, the treatment will be slightly different. So, for example, you have a license, and the company decides to amortize the license not based on the years that the license is going to work, but based on revenue. In this case, you need to talk about the elephant in the room, and you would need to say that, well, as for depreciation and property, plant and equipment, revenue is prohibited because price that is needed in revenue calculation has nothing to do with the wear and tear of the equipment. But for intangible assets, revenue indeed could be a good approximation of economic benefits. I would give you another example. Consider film license. Your film can be broadcasted across different regions, and different regions will have different ticket price. So if you buy a license to broadcast this film, then it would be expected that you are going to pay the license, the cost of the price of the license is going to be based on the approximation of how much film shows and how much price you are going to charge in this region, that region, and that region. So revenue would be a valid method. You may be tested on cost versus revaluation model. I would remind you that we need to use active market to find fair value, according to IFRS 13 fair value. But with intangible assets, we don't have active markets usually because they are unique. There could be active markets like for milk quotas, but that is quite rare. So most likely that revaluation model cannot be used. Also, we could be tested on the difference between intangible assets recognition according to IAS 38 and business combinations. With business combinations, we are going to recognize all of the identifiable assets, net assets. So let's say when we're talking about the research and development, what happened is that you started to capitalize the development cost only when pirate criteria were met. And you can't do that retrospectively. You can't say that, oh my God, I forgot. I was supposed to do that in year 2023. I just didn't know back then. You can't do that. But when you have business combination, when you acquire a subsidiary and they have some intangible asset, you don't really care about the history. You are going to recognize it at fair value. So more intangible assets are going to be recognized. The carrying amount will become higher because it would be not carrying amount, but rather the fair value will be used on that very date of acquisition. But still, some of the intangible assets will not be recognized because they are not identifiable, because we don't have control over them. Like, let's say the knowledge of employees. We can't recognize it because we can't control employees. Even if they are bound by working arrangements that they need to work for a company for 2 years, you can't make them use the knowledge that they have obtained. So that could be tested, and on top of that, you may be asked to talk about integrated reporting integrated reporting is not prepared according to IFRS. So there, companies would disclose intangible assets, even those that are not recognized normally, like the knowledge of employees will be disclosed in intellectual capital. And finally, disposal. The question is, if you are going to sell the intangible asset, whether you are going to record your incomes in other income, net of the carrying amount, or whether you are going to record it as revenue and cost of sales. And you need to look at the keywords. If you were told that the company correctly recognized something as intangible asset, then you say, no, intangible assets can't be disposed of using revenue account. They should go to other incomes and expenses. You also need to challenge the business model. Is the business model of the company to develop the asset, or is it to sell them? So as you can see, intangible assets can be tested in a number of ways. And these, what we have just covered, are most common examples. Make sure that you understand them, and better yet, make sure that you practice. And good luck with this standard. Cheers!